Welcome everyone to the conference call for the Foods Ltd IPO. The IPO is now live. Forbidden Food is a multi-brand food and beverage company that's been around for about 7 years. The two founders, Marcus Brown and Jared Milani, are on the call, so I'll hand over to them in a sec. In terms of the transaction, we're raising $6 million at a pre-money valuation of $9 million. The offer is set to close on Friday, the 14th of August. We raised $2 million in the pre-IPO about 6 months ago, and that has gone to really building the company up. So I'll hand over to Marcus and Jared, and we will be available for any questions after the call.
Thanks, Rory, and thanks for joining us, everyone. Jared and myself started Forbidden Foods basically about 8 years ago now, with our first product being black rice. Which we can see there. We launched that product in the time when quinoa and chia seeds were really taking off, and that plant-based sort of alternative market was being developed. So over the years, we've really just maximised our strength within sort of gluten-free rice and grains, and from there, the business has really carved itself out into that sort of range of plant-based products. From there, the business, we've expanded into various value adds. So we've got our retail products, but we've also been developing our food service, manufacturing and export markets over the years. So we've got a very diverse revenue stream, as well as a product mix that allows us to have multiple revenue streams. But also now that the traction is really going much stronger within sort of the gluten-free, plant-based and healthy snacks sort of environment. The business is poised to grow a lot quicker, basically due to the new trends coming through. The business itself, Jared and I founded the business in our early 20s. So we basically met at university, and we saw these opportunities for these healthy products to come out in market, and from there we developed the Forbidden brand and really took over that space in sort of the rice and grains and organics. And then the business itself was always funded with cash flow. We always reinvested profits, and up until the pre-IPO, we hadn't taken much external capital. But seeing the opportunities on the horizon now, and the traction we've had with our new products, we feel the time's right to really grow in a much larger way. And obviously the public markets are a great fit for the plans that we have. The business itself, we do play in organic foods, healthy snacks, and the baby food markets. The baby foods, we predominantly were always supplying ingredients to companies that were using it in their products. So it was a natural evolution for us to release our own range of baby food products with the ingredients that we already have and supply, but in our own retail products and form. And from there, we've been able to use a lot of Australian sourced ingredients. So we've been lucky enough to have some seed investors early on that joined us, who are a large agriculture institutional fund, who allowed us to get access to fruits, grains, and various other Australian produce directly from the farm. And we've been able to just supply, build that supply chain and then funnel that straight into retail and bulk products. Obviously saving cost of goods, but also allowing us to have a really nice story around provenance and transparency. We've got a very diverse customer base. As I mentioned, we have major retailers. So we supply Woolworths, Costco, Metcash Group, but we also have independent distributors in each state that supply about 3,500 different stores, grocers and delis. We supply manufacturers directly. So companies like Sunrise, Vesco, that make meal kits and the McCain meals and those sort of meals you see in Woolworths. We do supply them directly. So our products end up in products that are in Woolworths and Coles through other means. And we also supply a number of franchises in terms of their menu and menu development. So Zambrero, Hero Sushi, Subway. We do Subway's gluten-free sort of wrap formulations with the manufacturer partnership. And from there, it's just these unique, gluten-free and plant-based products that are becoming more mainstream. And our international. So we do already have a company in New Zealand and a warehouse in Auckland. We do supply Singapore. We've had a distributor in Singapore for 5 years now, who are growing. And we also supply US and the UK. So we supply containers periodically into North Carolina and Boston, and then into Belfast, into Northern Ireland, which is, allows us access to the wider UK. So for a business our size, we've really built the fundamentals. We really make sure that our sales channels and supply chains are set up for scale, as opposed to, using money and capital to buy sales. We've sort of done it the opposite way: build the supply chains, build the fundamentals, and then grow in that fashion. The industry itself, so food and beverage in Australia alone is a $172 billion market. And in that space, we are in organic foods with our grains and rices, healthy snacks with the Funch range, and then the baby foods, which are soon to be in a retail format for us. So in these segments in retail, we already have a strong presence, which we just wish to grow now. And we also do our industrial food service and food manufacturing supply, so the wholesale side of things, which is really easy business. It's good margin, and it's high volumes, which allow us to then use those volume advantages to really attack retail in a much more competitive fashion with more margins. So having those, have that multiple revenue streams and businesses really helps. They benefit each other. The growth drivers we're seeing, we've been in the industry now for many years. We've seen a lot of the trends come and go, but what we see staying is obviously brand Australia, especially now in this sort of macro environment where exports and sort of having supply chains that are Australian focused is also getting attention, but also for exports into other Asian markets that might be looking to Australia as opposed to the US or Europe. A growing middle class. We see, obviously there's now a healthy product sort of demand coming from various classes, where we used to see organics and health coming from sort of upper middle class. We're seeing that the middle classes and below are looking for healthier products as just an expectation. So that's increasing the category quite dramatically. And we're seeing aging population and health conscious consumers, which are basically all looking for low sugar, plant-based, sort of non-dairy alternatives to all their diets. Not necessarily more vegetarians or vegans. We're not seeing more of those. We're just seeing more flexible eaters, people looking to supplement their diets with less meat or dairy, but with products like ours in terms of plant-based and sort of, non-meat alternatives. So the business itself, as I mentioned, we were really strong on building our supply chain and our back end. So we are BRC certified, which is a top tier food safety certification. This allows us to supply Woolworths, Coles, PFD, all the big ticket sort of retailers, as well as customers being the top tier QA. We're organically certified. We've been organically certified for many years now, which we retain, and that's helped us sort of attack that organic market in a strong sense. And we also have all the back-end supply sort of processes and procedures with terms of system integration. So we have the ordering platforms and the fulfillment platforms that tie directly into your Woolworths, your Costco's, your Metcash's. So scalability is a lot easier when our systems are all talking. I'll pass over to Jared now, who'll go through the brands within the business.
So Forbidden Foods Group is a house of brands. So it has 3 key brands. I'm going to start furthest to the right-hand side. So the first brand, Sensory Mill, is all about that plant-based food trend. One of the things that we learnt really well was the ingredients coming off farm, these exciting Australian ingredients, and how does the consumer connect with these Australian farms? Well, we found that there are all these exciting ingredients and we know how to handle them, process them and add value to them. So Sensory Mill is all about ingredients for the food enthusiast, and we're really targeting those plant-based food manufacturers, those consumers at home looking to add these other sort of ingredients to their diet. So one of the key products there is our apple flour, which we've won some awards for and got some front page press for, and we're the only ones in the world that can do that. So Sensory Mill has just completed the range with the pre-IPO funds that we raised 6 months ago, and you'll see that coming into market in the last month. Going to the furthest to the left now, Forbidden. Forbidden is the long-standing brand offering a rice through life, offering again on that plant-based trend. It's all about those organic whole grains, both in flour form and value-added forms like organic rice flakes. The brown rice flakes went into Woolworths in March this year. The brekkie rice, the microwavable rice, went into Woolworths a couple of years ago. So again, Forbidden and the rice range continues to go strength to strength, and especially during COVID-19, as saw the sales excel in that space. Now to the middle brand, Funch. Funch is all around fun family food. Again, connecting, produce that's on Australian farms directly to consumers in the baby foods format. So, Funch is all about targeting young families and giving what is traceability in the product range. So as we step through the presentation, you'll learn a little bit more around the products in those ranges and also the go-to-market strategy for
it. So coming back to our channels, as I mentioned, we have that diverse revenue mix from food service, retail, and quick service chains and food manufacturers. So there you can see a split, a pie chart, which shows the actual revenue split from our segments of the business. So we are very diverse in the sense where retail, yes, is our biggest, but we also have that revenue coming in from food manufacturers that are using our products in their products. Quick service chains, franchises that are using our products in their menus, which are collaborations. And then food service, which is your wider PFDs and bidvests arrangements where, we will supply wider the hospitality industry. We also have had e-commerce from the start. We do have a very strong e-commerce channel where we use, not only our own websites, SEO, but we also, tie into Shopify and ship it. So we do have that scalability in e-commerce. We've seen our e-commerce sales, go up tenfold within this COVID time. So our e-commerce channel will be becoming a larger chunk of the business as we release these products. The baby foods are very easy to ship, subscription, that sort of model, very easy with the products that we have. But e-commerce will be a large pillar of the business as we grow, as well as it's a quite large margin area. But that's already been ingrained in our business from the start.
So stepping through some of the core ranges, starting with Funch and the baby foods range. So Funch was a long-term brand. It's existing market for 8 years, and it was started by 2 entrepreneurial mothers who wanted to better young families with nutritional products. We acquired that brand a year ago to release these 100% Australian baby purees and grains. So the consumer of these products has full traceability. They can tell that particular fruit comes from particular parts of Australia, and the grains that are mixed in come from particular farms within Australia as well. And this sort of range versus our competitors don't have the transparency on this range, but also we're getting fruit directly from the farm, we're handling ourselves, and we're getting it processed, which means that we've got really great cost of goods on these sort of products, and we can bring this out to market at a really competitive price point. So we're targeting this range. We have the raw materials, the packaging's being printed, we're just going to pack it off and sell it. And we have a bit of a go-to-market strategy a little bit later on in the presentation around the baby foods. As I mentioned, Funch was a pre-existing brand. It had DIY protein ball mixes and gut health smoothies, really targeted at young families. Since we took the brand over, we've refreshed the brand, and this is the new look and feel of the packaging, which has just been released in June. And we had a significant strong launch via e-commerce, and it's going back throughout its distribution partners. So again, we're trying to target all parts of the pantry for young families that are going to buy the baby foods, but also other pantry items that match the young family segment. Sensory Mill, so we mentioned that plant-based food trend. This, with the pre-IPO funds, we targeted the release of these 100% gluten-free, 100% Australian flours. These are really strong ingredients that have really great margins that are going out to market. And they both have a retail offering, but also a food service bulk manufacturing offering, where we're able to supply the likes of the plant-based meat manufacturers, bulk forms of all these different lines. So again, Sensory Mill is finding those next generation of exciting ingredients that have high fiber, high protein, gluten-free, targeting that plant-based consumer. Forbidden's had a long-standing range of whole grain organic rices, as well as the value-added microwavable rices, which has been out in market for some time. There is a snacking range, which we've completed MPD on, and that's chocolate-coated rice cakes. Those particular products, the chocolate-coated rice cakes, are not out in market, but the R&D is completed on those lines. And then we've been doing gluten-free rice flours across a number of different styles of rice, which leads itself to different baby food cereals, soups, and gluten-free wraps.
Yeah, so this is our customer segmentation. So going back to that pie chart that had that mix of revenue, this is a split of our customers that we've built, networks over the years. So our Woolworths, Costco, IGA, Metcash, our independent retail, which is each state-based distributor. So like Unique Health Products, Health Magic. These are the distributors that service health food stores, grocers, delis within each state boundary. Our food service offerings, so we do supply PFD, Bidvest, we supply Superior, so a number of these food service distributors. We've already been set up for many years and we do supply already. And our quick service chains, so we do, Zambrero, we supply all their plant-based grains, things like pepitas, spirulina powder, the rices. So all these really, high fiber, high protein, very new and edgy ingredients that are becoming mainstream. And Subway, so we worked with the manufacturers and Subway to develop their gluten-free wrap with our unique flour ranges. So that's now in market and you'll see that in the Subway stores in Australia and New Zealand. And then food manufacturers. So we do work with food manufacturers like Flavour Makers, Vesco, those sort of companies, but they also make products for us. So we supply Flavour Makers ingredients and they make our brekkie rice, for instance, that's in Woolworths, but we also supply them for their own brands. Our export markets, I touched on this earlier. We are set up in New Zealand. We have been for a number of years. We actually decided to expand into New Zealand before we even went to Woolworths. We're very mindful that the big supermarkets, are a bit of a trap sometimes. So it's being careful. We saw the export market as a much bigger opportunity earlier on. So we've had a warehouse in Auckland and we service, Gilmore's Foodstuffs Group, a big supermarket chain there. And then a couple of the big distributors in New Zealand already. So we treat Australia and New Zealand very close, very similar. We have Singapore. We've had a retail distributor in Singapore for a number of years. Now they're asking for the other ranges, the other products, which we will release to Singapore post the listing. USA, we do supply into North Carolina and Boston containers periodically of various ingredients and plant-based goods that go into manufacturers and a franchise customer over there. And then Ireland, so Northern Ireland, that's where we've been supplying for a number of years. So these export channels have been set up for a while and we're quite well versed in shipping containers where they need to go. So we've done that many times already.
So with the Funch baby foods range being a really core release or product for us to focus on at release time, I thought we'd share a bit of our strategy and go to market. Obviously with the pre-IPO funds, we went and developed these products, we did testing and we created it. But at the same time, we started going, okay, well, how are we going to get these products out? But also how are we going to make sure that this brand and these products stay on shelf for a long period of time? And so the strategy is that number one, we need to go after 3 different channels. So we're going to go after a retail partner, pharmacy partner, and specialty retail partner. So when I say specialty retail, think of the likes of those retailers that specialize in just like baby products in general. Now we've started conversations with all 3 of those different channel partners and they really like what they're seeing and they're keen to get things locked in. So getting into those 3 different channels, that's close to 2,000 stores across those 3 different channels. That's all about building our credibility within Australia for what is ultimately the export play. So while we're doing that, we're expanding our online presence. Funch already has 10,000 followers online, email subscriber database of 5,000. We're going to continue to invest in its e-commerce side of the business, but also partner with Asian e-commerce partners. This ultimately, again, adds to the value of our export strategy. So we've had discussions with some international distributors throughout Asia around our particular range of baby foods. And their resounding feedback was, hey, look, you need to build that Australian credibility. Our consumers, even though they're in another country, they're going to contact their friends and see if the product's on the shelf. So we're quite confident we're going to be able to find these channels, but we've got these channels partners for launch. and then that will lead to a really successful export play down the track.
Yeah, so moving to some financial highlights. So the business grew 29%, half on half. This is based off our existing product range, not actually factoring in the new products that are to come. So even with coronavirus, the business grew in quite a strong fashion. That's even with food service, hospitality, all those channels dying off in a big way. We saw a massive uplift in our retail offerings, which obviously helped the business dramatically, but it also shows just how resilient the business was. We're able to move into different segments. If food service is doing poorly, retail is doing strong, and vice versa. So the business is quite resilient, and it showed a great growth trajectory when multiple businesses went the other way. So we're quite happy to see that 29% was achieved, with the environment we're in. As we mentioned earlier, the pre-IPO funds we did deploy into marketing, obviously new product development, but we did realise off the metrics we saw for every dollar we spent on new marketing efforts, we actually saw $5.30 in return in new sales. So 5.3 times return off our marketing spend was a validation of the marketing strategy that we've put together. And we want to carry that forward with the IPO funds, obviously, to do that in a much larger scale with a bigger range. So with the baby foods, obviously, powering ahead with the plant-based products that are in market, but seeing that uplift return in a larger scale now once we post listing. And then just a brief marketing outline there of the size of the markets that I mentioned before, and just potential market shares just on tiny sort of percentages. So Australia alone is quite a large market, but export is where the potential really lies. So the forecast, these are basically semi-actual numbers, but we did grow year on year 20%, regardless of COVID-19. The business itself, in terms of the public arena and the way the accounting treatments work, we do have an industry-leading GP of 34.5%. So that's much higher than Bubs, than Bellamy's, than Freedom and Wide Open. So we're sort of leading the pack on a lot of that GP. In FY19, so prior to kicking off this IPO exercise, which does incur costs, we were basically EBITDA break even. So as I mentioned before, Jared and I always wanted to reinvest, profits and cash flow back into the business. But the business is once the IPO is completed, is in a great position to be basically break even or profitable very quickly. And as you can see there, we did spend $650,000 on bolstering new products, finalising the ranges that are now ready to turn into revenue generating staff. We put on the team that's going to drive the business to $20 million revenue. And then we did the marketing spend, which showed that 5.3 times return. So essentially we've built the fundamentals now. We've got the team in place. We've got the products developed, and now it's basically pumping sales, marketing and brand development to launch and to grow. So the business, as Rory mentioned, we've built the fundamentals with the pre-IPO. The costs, $1.3 million. So there's a lot of costs incurred in the pre-IPO, like the convertible note, how that's treated. That's treated as an expense, basically. So once the convertible note winds out, a lot of these costs are all one-off and disappear. You can see there that employee benefit expenses won't rise dramatically. We've put the team on, Jared and I are here. That one-off $140,000 is in regards to non-executive director options, how that's expensed. Cost of the offer, and then finance costs, which is related to the offer as well. So a lot of this is one-off costs that drop off over the coming 6 to 12 months. Some comparables, there's not many, ASX listed food businesses. So this is just the comps of where we sit with Bellamy's, Bubs, but then Wide Open, who are in that plant-based food space as well. And then Freedom and Pure Foods. So we sort of sit in between, multiple of those, but we're pushing into the baby space quite heavily. And as Jared mentioned, the baby space is really going to be the growth driver for the business going forward. The board and management, so there's Jared and myself as founders and directors. We obviously are joined by Adam Soffer, our company secretary, who we appointed just recently. He's quite seasoned in being that governance expert for publicly listed boards, but also private companies. He's quite heavy in the impact investing community, so he brings quite a lot of experience. Our non-executive directors, we have Mark Hardgrave as our non-executive chairman. He is a well-seasoned ASX and finance individual. He used to run a company called M&A Partners. He's been CEO of Merrill Lynch, Thorney. He's currently chairman of Pentel Group, which is another FMCG group, which he has a lot of experience in that space. He also brings his chartered accounting experience as chair to the board. So we're very lucky to have Mark on board. Colleen Lockwood, she brings a wealth of food experience to the board. She was at Kraft Heinz, at Golden State Foods, Tarosi Meats. So she brings that wealth of Asia Pacific, Middle East market knowledge, but really great experience around corporate food, dealings, negotiations, obviously sales opportunities, and how sort of margins need to look. So she brings that really great food experience to the board as well. And the offer details. Rory, did you want to jump in?
Yeah, so as I said before, raising $6 million at a pre-money valuation of $9 million. We are live now and we're taking bids. So myself, if anyone wanted to speak about the transaction, please call me or Cadman, who are the corporate advisor. So Ben Zervais is your contact at Cadman. We have been conducting a few meetings over the last week or so and have had really strong interest. We've had bids in from industry participants, and we've also got some really good interest from some of the institutional market as well. So what we'd like to do is, if obviously the public offer is open, so you can apply on via the prospectus. If you did want to talk about a firm bid, please talk to myself or Ben at Cadman, and we'll go through that as well. So I think we'll keep moving and then hand over to some Q&A.
Yeah, we might just jump through the use of funds too quickly. So quickly, with that $6 million, we are looking to spend on sales, marketing and brand development. So to get that same return we saw on marketing spend, admin costs are relatively stable, but essentially we are looking to really just drive the growth of the brands and the products. So the bulk of the funds will be going into basically sales, achieving the sales that we want in the next 12 to 18 months. Which, in line with what we saw with the pre-IPO fund deployments. But other than that, in admin costs, we are putting on a CFO straight away. He comes on board basically just after listing. So yeah, essentially that's the plan with the use of funds.
Thank you, Marcus. So we'll now open to Q&A. So just a reminder to listeners, if you do want to ask a question, you can use the raise hand button within Zoom, and then we'll unmute you when it is your turn to ask a question. Alternatively, you can use the Q&A panel within Zoom if you don't want to speak over voice. So we've had a couple of questions come in already via the Q&A panel, but for those wanting to use voice, now would be the time to raise your hand. So the first question we've had submitted is from Shuo Yang. He wants to know, can you give us a sense of like-for-like repeat order growth in your retail channels?
So great question. I think the best way to describe it is, our existing range, we haven't had any deranging or any products, be ranged for a year and deleted. So, if I was to think about our Costco line, our Costco Black Rice 1.25 has been on shelf for 2.5, 3 years. So basically since it's gone in and there's no signs of it coming off. Our Brekkie rice went in 2.5 years ago. The original retail rice range has been around for 7 years and continues just to grow in ranging during COVID-19. So I think one of the strengths that, we've built over time is longevity in brands. And, that was my background. I worked in supermarkets marketing for 5 years, and, saw a lot of suppliers come and go. And one of the things is you've got to support your product out in market, and then it holds up. And that's how you drive a really great value brand. So, yeah.
Thank you. The next question as well, submitted by the Q&A panel, is from Charlie Burgess. He wants to know, can you dig a little deeper into the sale and marketing spend? What avenues and where have you spent previously? And then in brackets, you said to show the 5.3 times, etc.
Yeah, so when we talk about marketing, we're not talking about, just giving away products for free. We're talking about like in-store support, like tastings. We're talking about like point of sale, really nice displays, ambassadors, social media marketing. So all the things where we see, when a buyer buys a product, they want to know that you are supporting in market. They want to know that you're talking to your consumers and you're directing them to them to buy, whether it's in store or online. So where we've seen really strong uplift is we're able to get this spend going in a way that has really strong return. I think that's just leaning on my marketing experience to date and been doing it for 15 years now. So that's where we're seeing, really strong return.
And Charlie just has a follow-up to that as well, referring to where is the 3 million likely to go?
Yeah. So again, with the baby foods going out, it is around that partnership and support. We don't expect obviously to walk out the door and spend it on day one. There is a plan in place for that to give us longevity over a period of time. So, going out in the right way with, field support, distribution field support, point of sale, advertising, but really done in a way that's just not, throwing money out there and hoping it works. It's with a plan where it's matched with the buyer. So we know exactly what the buyer is going to buy at the end of the day, or the retailer is going to buy at the end of the day. And then we're matching a really efficient spend to that.
Thank you. The next question is from Lucas Kong. He wants to know, are there any concerns around the supply chain of raw materials, such as black rice, coming from COVID-affected countries?
Look, initially when we had some of the shutdowns, there were delays. So we had about a 3 to 4 week delay in our supply chains. That was predominantly out of Asia. But we've not seen any delays so far. And the good thing about our business is that we're not very capital heavy. We don't own factories and machinery, so we can actually divert and move resources away when we need it. So we can go to different contract packers, different manufacturers to do different jobs as we need them to. So we've been lucky to be so flexible. So we've had we haven't had anything more than about a 3 to 4 week delay, and that was at the start of coronavirus. Now we're not seeing any delays for raw materials, especially the Australian source products. They're readily available through our current investor base. So yeah, no delays.
Thank you. And we've actually got a question in on the voice now. So it's from Graham Carson. So I'll unmute you now, Graham, and you can go ahead with your question. Graham, if you could unmute your mic, that would be, okay, there you go.
Thanks, Rory. Hi, guys. I've just got a question around your export strategy. A twofold question. Firstly, the existing targets of Singapore, Northern Ireland and the US, how did that come about, those specific regions? And secondly, what do they represent by way of percentage of overall revenue and the strategy around expansion going forward?
Yeah, no, great question, Graham. And so a lot of our export strategy is usually driven by guaranteed demand. So the markets we're currently in are with customers that basically said that we want you to supply our products. So we had a guaranteed sort of sales source. We didn't just go into the market hoping to sort of develop the sales from scratch. So with the US, we had a manufacturer and a franchise customer expand their own business over there, and we naturally went along for the ride. So we made sure that the business was earning cash from that market basically before we went there. And we didn't want to just go and, splash money in US dollars and hope for sales. So that's where US and Ireland as well, we had a customer expand there. And Singapore was actually a natural evolution. We had a distributor relationship develop. And then we basically helped them get into some of the key supermarkets in that market. And that's just become a sort of a fruitful arrangement. In terms of revenue split, we're about 10 to 12% of revenue in export markets, which is intending to grow, but obviously we have been capital constrained over the years. So us deploying money into, long working capital lines in export markets wasn't the smartest use of resources with the capital we had. But as our capital constraints ease, the expansion into those markets becomes much more attractive and lucrative as well. But that's the rationale behind those.
Can see there's a couple of other questions that have come in here. Mark on the text line has asked, have the Funch baby products and powders been fully developed and signed off in anticipation for their launch this year? So the pre-IPO funds went to getting all the raw materials together. So we're sitting on, we have about 80 tonne of raw fruit puree ready to pack. We have the grains. Essentially, once the IPO is done, we just place the order for packaging and we're ready to go. So the new product development, the formulations were all done in that 6 to 8 month period with the pre-IPO capital. So essentially now the IPO funds are just supporting the launch of those. And we have the raw materials in stock already. So it's essentially waiting for packaging from Amcor and we're ready to go.
Fantastic. So the next question is from Evan. He missed the beginning of the presentation. So he just wants to know, how do you plan to grow the supply chain? Will this be in-house or with broad-based distributors?
So the supply chain is basically, right now, we're not even scratching the surface of the customers that we already have. They're large customers, like Woolworths, PFD, some of our larger retail networks. So essentially what we're looking to do is grow those supply channels we already have with the new products, but also with that ability to support, larger product releases. So more manufacturing through our manufacturing partners to support that growth. But essentially, we don't have any issues in supply chain growing that with our existing channels.
And Mark just has another one as well. Do you have any plans to do plant-based meats?
Plant-based meats is an interesting one. Look, it's not hard to do. There's a lot of players in the market already. It really comes down to whose brand is better right now. And look, a lot of our ingredients, the chickpea flour, the apple flour and chia flour, all these, the high fiber and protein flours we're doing are actually ingredients in a lot of these products. So for us, it's about building that channel of supply to these manufacturers. And then if the market's sustainable, yes, we can look down that path down the track. But it's quite saturated already and there's quite a lot of big players coming in. So I think the dust needs to settle a little bit before someone jumps into just putting a meat patty together.
Thank you. The next one's from Lucy Stevens. She wants to know, what percentage of equity do you both, as founders, anticipate on retaining in the company?
So Jared and I combined will own about 25% post-listing. So about 12.5 each, and that's escrowed. So as you can see on the screen, most, basically there's a lot of escrowed shares for 2 years. Everyone's supporting the business. We're in it for a while.
Thank you. And we've got a couple here from Grant Carmen. These might be tricky to answer, but he wants to know, at what estimated revenue are you cash flow positive? And if you're able to give this answer, how long do you expect that it will take to get there?
Yeah, so look, we can't give out specifics for forward looking without getting in trouble, but essentially for the business to be back at a break-even point, we only need about $2.5 million of extra revenue. As you can see, in FY19 we were break-even EBITDA. So for us, just a small revenue increase covers the additional costs that we've put in place for the IPO and all the extras. Not a drastic amount of revenue needed to be break-even again.
Thank you. And we've had a couple of questions that were sent through earlier as well about the online part of the business. So what percentage of sales today are online, and where could this possibly go over time?
Okay, we'll talk to that.
Yeah, so I guess the e-commerce side of the business, Marcus and I have been basically for some time trying to build a really strong business model outside of the major supermarkets, and that's where we focus on food manufacturing, food service, export, and we absolutely think e-commerce will be a strong pillar going forward. We would love for it to be a third of the business in a couple of years' time, and we'll be putting a lot of effort in behind driving that and owning the customer base. So my background, at Coles was digital marketing and a marketing strategy specifically around that. So I think I've got a lot of expertise to deliver it in that space. Today, e-commerce has been a small piece. We feel like it's a piece that will only grow for us.
Thank you. And we've just had one come in from Adam. Assuming you continue to grow strongly, are there any constraints in sourcing ingredients, particularly organic ingredients?
No, we haven't had any issues over the years. So we've been, operating, 7 to 8 years now comfortably, and we do have dual sourcing policies in place, so we can actually source a lot of our organic produce and ingredients from alternative suppliers, as we need them. But in terms of the Australian sourcing, no, there'll be no capacity constraints in the Australian sourcing, because we have some seed investors who have those assets that we can directly work with. So we don't see any supply issues.
Thank you. And this is the final question that's come in at the moment, before I prompt for any more. Another one on the online part of the business. How much better are the margins in this vertical? And what is the interface like, i.e., how do consumers hear about your goods? And is there an opportunity to expand your distribution channels?
Yeah, so there's a bit of a sweet spot with e-commerce where you can really drive profitable revenue in a really manageable way, where, say, for example, if you were to use it against, say, normal retail, when you go on promotion with the retailer, you're not sure how many units are going to sell and you can't manage those margins, whereas e-commerce you can. So the best part about driving e-commerce is sometimes you can put in $1 and you're guaranteed to get $5 out if you have the business model right. We did some testing with the pre-IPO funds, which we were really stoked with the results. It's one of those ones we can continue to drive money into it and we'll get multiple money back out of it. And then the supply chain piece, we've demonstrated we can build an international supply chain and build, subsidiaries in other countries. For us to bolt on a distribution out in the US or a distribution point in Asia for e-commerce, we don't think that's out of our as something that we can do. We can easily do something like that.
Thank you. And one just came in from Patrick. Are there any licenses required, or do you intend to apply for any particular licenses which will allow you to sell current/future products into China?
So the good thing about our products is that it's not infant formula. So there's a lot more regulation and rules around infant formula, which is, food does escape a lot of that. So for us, we have all the quality accreditations, BRC and whatnot. But to export food products to China is a lot easier than, say, just straight dairy formula, which does have an extra 2 or 3 different license requirements. And as you can see, it's quite rigorous. So our food products, we've already tested, sending stuff to China and Hong Kong, and that's had no issue with the sample tests. So we don't foresee any large regulatory hurdles to do that with the final baby products.
Will be available for any other questions.
Thank you.
Thanks, Jared.
I'll now end the meeting, everyone. Thank you for your attendance.
Thanks all.